Hey everyone, welcome back to your weekly market outlook. This is for the 4th of November 2024. Let's get this started with a outlook in the market here. And obviously this is last week's data, and very important stuff is happening last week. Let's focus on in terms of the GDP growth first. Overall, I think global GDP growth, I think is pretty stable at this point in time. We're not looking at a lot of negatives at this point in time. There's a lot of improvements that we can take a look at here. Core PCE numbers, this is the personal spending is higher than what the market is expecting, but everything else, if you take a look at the numbers, it is pretty much very close to the consensus here. Also, Bank of Japan didn't hike interest rate; they kept it at 0.25%. So at least some of the risk factors out there in the market is already out of the way. Obviously, if we take a look at the labor numbers, this is something that was quite shocking in terms of the numbers, but we didn't see that shocking reaction in the market. And part of that is because market has already anticipated that, the NFP numbers or the labor number is probably going to get weaker because of the effects from the hurricane, as well as the strikes in some of the states there in the states. So the number was expected to be low, but what we got was 12,000. The consensus was 113,000. And if we take a look at the previous month's number, it was revised down a little bit, but it was 100,000 above expectation last month. And for the month of October, the data that was just released on Friday, we were actually 100,000 below the market consensus. So we got 12,000. Consensus was 113,000. It started the week at 140,000. So cutting back expectation, we still think the NFP number was pretty horrible there. But the unemployment rate was stable, 4.1%. So we do have a little bit of a mixed numbers here heading into the election tomorrow. The ISM manufacturing numbers, we do see a lower ISM manufacturing numbers, 47.2 to 46.5. Consensus was 47.6. All right. Let's take a look at what's in store for this week first. Okay, so tomorrow we have the RBA interest rate decision. They're expected to remain on hold, no rate cuts to happen from the RBA. So this is slightly providing a boost for the Australian dollar here. And then we have the ISM services PMI. Obviously tomorrow is the US presidential election. We'll talk more about that in a minute here, because what we are looking at here is that there's a direct correlation to the polling numbers here. So last week, Trump was leading the polls by about 1 to 2% here. But the latest polls that we have, it was actually Harris that's leading as per yesterday. And the market reaction today was that we see that sell-off in the US dollar, and the dollar index has retreated significantly. It actually went all the way down from 104.50 to 103.50 just in the Asian morning, and we're just starting the day today on Monday here. Now, leading the poll, 49% for Harris, 48% for Trump. In terms of the electoral college here, 226 for Harris and 219 for Trump. Each party needs to basically get 270 to actually win the election there. So the polling is actually really close. Now the race is very close right now, and there's a lot of uncertainty building up, and that's the reason why we're actually looking at the US dollar kind of weakening at Monday's open here. So it'll be a very interesting volatile day today and tomorrow, looking at the election results, obviously, and the US dollar strength is definitely tied into the polling. There's that correlation right now. They're positively correlated. When Trump is leading, the US dollar kind of strengthened, and when Harris is leading, the US dollar kind of slumped. So obviously for the US dollar to be strong, Trump basically has to win the election. That's basically what the market is kind of expecting right now. It is kind of black and white in terms of how this is influencing the US dollar. And that's tomorrow, okay? Other than that, we have the Bank of England interest rate decision. Bank of England is expected to cut by 25 basis points. That's going to be on Thursday. On Friday, we do have the FOMC interest rate decision. And judging by the numbers that we have last week, especially the labor numbers, we do expect that rate cut to go live next week. So we are expecting the FOMC to cut by 25 basis points there. So we're likely going to see that pressure in the US dollar as well. Okay. Let's take a look at the market here. Aussie USD, you can see that jump up there. There's a lot of gaps in the market at Monday's open here, just because of the polling results that was updated yesterday there with Trump losing it. Harris is kind of leading the polling right now. But yeah, Aussie USD, as I said last week, we have transition below the Ichimoku cloud. We do see that change of character for the Aussie USD. This one here has pushed down lower. We did find a little bit of support at 65.50 here for the Aussie USD, but right now, this week we are currently testing resistance at about 66.25, and then we are looking at resistance 2 and resistance 3 on the pivot level as our main resistance. We are looking for a little bit of a pullback. We're looking for that retracement happening on the Aussie USD here, and we do expect 66.50 to 66.80 as our potential resistance. Any failures there, basically any failures below 67 cents, that's where we are expecting sales to come in into the market to kind of pressure the Aussie here. But right now, this week, the mood here, at least at the very start of the week here, is that we might actually see the Aussie being supported here just across the board. The US dollar is kind of losing strength at this point in time, and that's the same thing we're looking at here on the Euro USD. We can see here we're now back at 1.09, and obviously this is a very important level for the Euro USD because this was kind of the midpoint for the Euro USD throughout 2023, 2024. So any push back up above 1.09, that's going to take this above the resistance 1 on the weekly pivot, and then it would actually open up for the correction to the upside towards resistance 2. That's basically 1.0970. And again, we're looking for a correction. We're not looking at a trend reversal here, so we do see limits in terms of how far the Euro USD can recover. But again, right now 1.0950 to 1.0970, right around where the resistance 2 and where the Kijun Sen is located. That's where we're anticipating the limits for the Euro USD this week. Okay, and the pound USD is attempting a similar correction here. However, this one here, we are being faced by a very tough resistance at 1.3 to 1.3050. So this is where the previous support is located. This is where the previous key level was. This was basically the stronghold of 1.3. And right now, if we take a look at where the 1.3050 is, that's the base of the Ichimoku cloud. So we do expect this level to kind of act as a strong resistance for the pound USD. Any break above 1.3050, then we might anticipate a stronger correction to where the Kijun Sen is lining up with the resistance 2 on the weekly, which is at 1.3130. That's for the pound USD. All right. Lastly, we have the dollar Japanese yen. Obviously, if we take a look at the reactions from last week's NFP results, we didn't see that sell-off last Friday. In fact, we actually saw the US dollar being supported. So we can attribute to the sell-off here today on Monday morning here to the latest polling result that Trump is actually behind. So with that happening right now, what's going on with the dollar Japanese yen? We are looking for that pullback to happen again. We are below 152 as of Monday morning. Right now, the next support level is going to be at 151. That's where the 23.6% retracement is going to be. That's where also the support is going to be at 150.75. So this is our immediate support level for the dollar Japanese yen. So if this level holds, then we might actually see buyers coming into the market. However, judging by the turn on the stochastics and the turn on the RSI, we're looking at a little bit of an overbought condition here. So I think we should anticipate a much deeper correction here. And that correction that we are looking out for is definitely around the support 3. We're looking at August high, which is circled there, the August high at about 149.50 level. That's going to be the anticipated support that's likely going to be tested. That's going to line up at around 38.2% Fibonacci retracement. That's about the support 3 on the weekly pivot as well, and that's also where the Ichimoku cloud is located. So I think that's a much more realistic pullback that we should anticipate for the dollar Japanese yen. But again, regardless of the situation here, we are looking at 151 as our immediate support level first, but beyond that, we look at a much stronger support level at 149.50 to 149 level on the dollar Japanese yen. All right, so with that, good luck for your trades for this week, and I'll see you soon.